Hello. This is Alex, the beginner investor which you met in the previous episode. If you missed that, you can click here to watch it. Alex already invested a part of his savings in copy trading to generate a passive income. Sitting on his balcony, Alex begins to study the basics of investing. He finds many useful articles and posts on the internet. Ready to find out what he learned? Give this video a thumbs up and subscribe. Now, let's go. Among many other great sites, Alex is especially impressed by the content on Investopedia, CNBC, and Seeking Alpha. One of the very first things that he learns is that there are two main types of analysis: technical and fundamental. Technical analysis predicts the price movements using historical price patterns and market statistics. Fundamental analysis, in contrast, evaluates the intrinsic value of an asset. It is based on external events and influences, as well as financial statements and industry trends. Technical analysis focuses on terms like moving averages, price levels, candlestick patterns, Bollinger Bands, and statistical performance. Fundamental analysis focuses on stock valuation, revenue growth, dividends, stock-related news, or even the global economy. The two methods are very different. So, it would be good to pick one of them to master first. Alex chooses the technical analysis, as it seems simpler and easier to understand. Let's look closer. Moving averages. Let's say there is a stock oscillating over time. If we want to identify a trend that gets rid of that noise, the moving average is the right instrument. It can be easily added to the chart as shown in the video. Let's keep default settings for now. We got a red line which shows a smoother trend, calculated as the average of the last 50 prices, hence the name, moving average. Alex thinks that whenever the price is under the moving average he can consider it as a good price, and when it is above it is better to wait. In other words, Alex is more comfortable buying when the stock price is under its own average performance. That seems to be a good tactics, but this is not sufficient, because it does not give the information where the bottom can be. That's why there is an extended instrument available. MACD. Moving Average Convergence Divergence. It is a trend-following momentum indicator that shows the relationship between two exponential moving averages. The MACD is calculated by subtracting the 26-period moving average from the 12-period moving average. It is not that complicated as it sounds. Let's simply add it to the chart. That takes only a couple of clicks. Default settings have the 12 and 26 periods for MACD, 9 periods for signal line, and the following colors for the chart. Let's just click Create. We got a new chart below, which we can enlarge a little bit for better view. What we can see here is a black line, which is the MACD, and a red one which is the signal line. During a downtrend, the two lines are below the zero level. When the black line intersects the red line and goes above it, that serves as an indicator of a potential trend reversal. Many traders use this indicator for selecting an entry point. The understanding and usage of this instrument is quite simple thanks to the built-in tools on Etoro platform. Let's move now to the next method. Price levels. Support line and resistance line. This is a much simpler method, which just encapsulates the stock's oscillating range. A line which connects the bottoms is called a support line. A line which connects the tops is called a resistance line. It does not necessarily need to be horizontal, it can be also oblique. This is not a very elaborated method, but it can help to understand what the expectation could be. That is probably enough for today. Alex is not in rush. His investment in copy trading already generates him a passive income. He can have some time for him and exercise in free air. If you enjoyed this video, don't forget to give it a thumbs up and subscribe.